on money.
Good morning. We made it to another Friday. I hope everybody is staying healthy and doing well. Today I want to talk a little bit about CEBA. CEBA is the Canada Emergency Business Account and was put in place by the government through banking institutions as a solution to help small businesses receive a zero interest loan through your financial institution to assist in non-deferrable expenses to ensure that small businesses can get up and running again. Now, by non-deferrable, we mean things like rent that has not been deferred, operating costs, utilities, any payroll that you might have that's not wage subsidy applicable. And so all of those expenses to keep you up and going and maintain your business to ensure that you're on your feet and that we're giving a kickstart back into the economy are applicable for use of that CEBA loan. Now, those non-deferrable expenses can be paid by the CEBA loan, but the CEBA loan qualifiers were quite stringent prior. So it meant that you had to have a business up and operating with a business registration number or business and GST number by March 1st of 2020. And you had to indicate that you could show that you were paying payroll of more than $20,000 to employees through the T4 path, the payroll path, not dividends, effective in 2019. You also needed to indicate that you were showing a net income in 2019 to be able to apply. This caused a lot of issue for people because you can be a corporation and be a sole shareholder owned and pay yourself in dividends and not payroll. You still have a viable business, you're still making money, and you still need assistance to get back on your feet with those operating expenses, but you wouldn't qualify because you didn't pay yourself T4 income, which as a business owner, you would know you get the option of how you split that and how we deal with your income as a shareholder. The problem was that they were running into a lot of shareholders that paid themselves dividends and therefore were not qualifying for the loan, as well as sole proprietors with significant businesses that were not qualifying because they weren't corporations. So there have been changes to the CEBA loan. They have been put in place as of this morning, June 26th. They were supposed to be put in place by the 19th, but there were some programming issues that needed to be passed on to the banks that they needed more time to work through. So one of the biggest things is applying for the CEBA loan. How do you do that? How do I know that I qualify? Well, as of today, you can qualify even if you paid yourself dividends or if you are a sole proprietor. So make sure that you're reaching out to your financial institution. If this is something that could get you back on your feet as a small local business, reach out to your institution because the application is not done through the government or online, it's done through your bank. So reach out to the bank that you bank with for your business and do the application process. Now, if for whatever reason you do not qualify for CEBA loan still, you still have an option because there is the RRRF funding loan. So if you are in a more rural area and you want to apply for the CEBA loan but you don't qualify, you can apply through Community Futures. Community Futures is local in St. Albert in the Westlock region. So if you're in Morinville, St. Albert, out in the country in this area, you can reach out to Community Futures in Westlock. You can go to the Community Futures website or look up the RRRF loan or talk to your professional, because if you need assistance getting your business back on its feet, your professional should be helping you with that to ensure that you have the appropriate documentation and the cash flow forecasting to show that you can make payment on the loans. The loans, whether they're RRRF or CEBA, are $40,000 maximum. So you can borrow any amount that you can prove that you require for non-deferrable expenses up to $40,000. That's a zero interest loan, whether it's through Community Futures or your bank, and it's over a period of 5 years. So the payments can be stretched over 5 years. They are encouraging people to pay off the loan by December 31st of 2022. If you can get that loan paid off, the $30,000 or up to $30,000, 75% of the loan paid off by the December 31st, 2022 mark, the remainder of the loan will be forgiven. So essentially you're getting a zero interest loan with the flexibility of up to $10,000 non-repayable able to help you get back on your feet and ensure that small businesses are being supported and encouraged to rise again post-COVID-19. So if this is something that you are looking into and you do have questions, if you don't know whether you qualify or not, you can talk to your bank, you can talk to your professional, and if you don't have somebody to assist you, please reach out. These are put into place to assist our businesses to make sure that our local economy is getting re-injected with funds and that our local businesses aren't dying off. So if you do need assistance, please reach out to your local professional. We're more than happy to assist. Again, I'm Crystal Lucier with Preferred Tax Solutions. This is TV7.ca.
I want money.